In the past month, I've been attempting to trade on the stock market and see how much money I can make. I've had some really interesting results, which I want to share with you in this video. I'm going to tell you about why I got into it and how I did it. I'm going to tell you about what platforms I use, what methods I use, what my strategy was, and ultimately the big question of, would I do it again? How much did I make? And what have I learned? So let's get into it all starting now. If you enjoy this sort of stuff, don't forget to like and subscribe, as I've got a lot of stuff which I want to share with you in the next couple of months. Anyway, let's get into the main topic. So that's right, for the past 30 days roughly, I've been experimenting with the stock market. I wasn't really sure when I wanted to make this video. I wasn't sure if I wanted to do a 14-day experiment for 2 weeks, or maybe even something like a 3-month experiment, a 5-month experiment. And I've decided on how I'm going to do this, both for myself and for the channel. I'm indulging in an 18-week experiment, which I'm going to document periodically. I don't really mind if I make a profit or a loss in this time period, as long as it's not too substantial of a loss. So I'm going to see what I can do, whether I become profitable at the end of that period, or whether I actually lose money. But I want to tell you about my results so far in the past month or so. So let's talk about what initially got me into it. As you guys know, I have been investing in the stock market for years. I spoke about this on the channel before. I bought my first stock when I was about 17 years old, and really it's been quite interesting since there. I've learned about the fact you can make a lot of money, and I've seen how you can lose money as well. So I always knew it was a powerful tool and something which I can and have previously experimented with, so I do have quite a bit of knowledge about it. With that being said, my strategy was always swing trading at the very latest, meaning that I would buy a stock, say today, and hold it for the next couple of weeks or months, in opposed to maybe day trading, where you'd be in and out of the stock in a single day, or maybe 2 or 3 at the maximum. So what I wanted to do with this experiment is try a more short-term approach, maybe day trading, and at the very worst, swing trading. And this has given me some really interesting experiences. I decided that I wanted to start off with not a lot of money, that way if I lose it I won't be that upset. So I put in £100 into my trading platform. Now of course £100 is not a lot of money, it's basically nothing, especially when we're talking about making some money. For instance, if I was to make a 1% return or even a 10% return, I'd only make £10, barely anything, so obviously it wouldn't be worth it. And that's where I utilised a power above me, which was the power of leverage. Now a lot of you guys will know about leverage investing, but for those of you who do not, what it is it's a simple concept. It's a concept that I don't have that much money to invest, and I can borrow money off somebody else in a certain way. Now, it's not explicitly taking a loan in my personal experience. What it is I put money into an account and then I get a leverage rate. So my leverage rate was 10x. What this means is that I don't lose any more money than the potential £100 on my platform, but the results that I can make can be 10x my previous results. So for instance, if I was to catch a 10% move upwards, I would potentially make 100% returns. But the downside of that is, if I was to lose 10%, my entire account value would be blown. This is where the risk came in, but obviously with such a low amount of capital, you have to take some risk to get such good results, and that is why I decided to embark in the leverage results. So like I said, I was trading with 10x leverage, and for the first couple of weeks it was going fairly okay. The first week itself was quite amazing, and I saw results of about 4x. So I started off with £100 in my account. By the end of the first week, I had £440 I had made. So that was really good. And at that point, I decided it was time to give it a rest for a couple of days. It was Friday, and the weekend was here. Waited until Monday, and then I started to trade again. That week, I made a loss of £100, leaving my total profit at £350. Then from there, I continued to make a little bit more of a loss, and I continued to double down on my position, adding to my account size, choosing not to trade with £100 but £200. This means that every time that I was to blow my account or lose money, I'd be losing much more, double the amount that I previously would. And what this resulted in is, when I made losses, it kind of blew the results out of proportion, because previously I made a 4x return on £100, giving me a total of £400. Whereas if I made a 4x result on, say, £200, we're talking about £800. So when I started to lose money on the £200 account, I started to lose it more quickly. Anyway, the week after that, I saw another profit. So then I saw a profit of about £150. Not bad. This took me up to a profit again of roughly £500, just under. So at this point, I was doing well, I was profiting, and things were going really well. Until the 4th week, which is a week that's just ended. At this point, my account value was about £300 because I didn't withdraw the money. And what I saw is that I invested in one of the stocks, it didn't really go the way I planned, and to be honest, I lost a significant value. So by the end of the 4-week experiment, I am actually neutral. Yes, I've lost my profits, but I've not made a loss so far as a whole. Obviously, I've lost money, but the money that I lost was pure profit to begin with. So I'm really okay with that. But I learned a lot from these losses, and I've decided that going into the future, this is an experiment that I am going to continue. And even despite the losses that I've seen in the past week, it's not something that's demotivated me. What I learned is that I was not trading properly, and for those of you who know about the stock market and trading, you'll already be talking about the results and the mistakes that I made in my trading journey. Yes, it was stupid to double my account size to an amount of money that I didn't want to lose. Yes, it was stupid to not take profits or have appropriate risk management. But this is all part of the journey of learning how to trade. Trading and investing are very different things, especially when leverage is concerned. Like I said before, if I'm trading with 10x leverage and I see a move of only 10% in the wrong direction, that's my entire account. So even a move of 2, 3, 4%, that's a significant amount of money down. And this is what I need to get better at managing. What I'm saying here is my key takeaway is improve on the risk management. I did alright for the profits, but this is a thing. It goes back to trading psychology. This is something that I got somewhat good at in the first week or two, which is why I profited the most there and took the smallest losses. But once I saw what money you could make, I got a little bit crazy and went too far with it. So what I saw is that my results started to diminish. I was risking too much capital. I wasn't really thinking about the losses that I could incur versus the profits. And a big thing for me is that I was actually over trading. So going into the next week or two and the next couple of months, I'm definitely going to change this strategy. And when we talk about what my initial strategy was to trading in the stock market, I did something that I made a lot of money on before in a short period of time trading. I decided to go against the markets in a process called shorting. A lot of you will know what this is, but for those of you who do not, a lot of people make money, or most people make money when the stock goes up. When you short the stock, you make money when the stock goes down. And in my opinion, it's always a bit easy to tell when a stock's going to go down than up. Of course, it's not an exact science, and that's just my opinion. But the reason why I say that is because when we see a stock that's run up by 20%, 30, 40, 50% in a day, it's likely that there's going to be some pullback action on that stock, in my opinion, in the next couple of days. So for that reason, I look for these stocks that are up 50, 60, 70%. I set a stop loss, or I intended to, and of course I take profit if the stock comes down. If it continues to go up, I take the small loss, and I'm comfortable with that. So that was my strategy, and again, all it was is by the end of it, I just made my position sizes too large. So what do I intend to do for the next week? Well, I think there's a lot of stuff that I need to rethink when it comes to this business and this avenue of making money. The first mistake that I did was, again, risking too much capital. But even bigger than that, I think, was the concept of overtrading. It's easy to do this. Imagine if you were in my position. One day, on Monday, let's say, you make £100 because you got the move right. The stock was up 50% of the day, and the next day it came down by 10%. You take your profits and you're happy with that £100. But then tomorrow, you want to find the next stock that's going to do that. But this stock was only up 10% the day before. You should really wait a day or two for the stock to go higher or see where it even goes. But you just get into it thinking, well, we can do this every single day. That's £500 a week. That's £24,000 a year. And it's like, no, that's not how it works. All that I've learned in the past week is that by risking your capital more often in trades that you're not certain with, you just run the risk of losing it all. And I think that's where a lot of traders lose money. They get blindsided with the fact that profits, when in actuality, you've just got the same potential to lose all your money. So there's a few rules that I want to go into the next week with when it comes to my trading journey. I'm going to set one thing clear. Set a maximum amount of trades that I'm comfortable doing, whether they win or lose. So let's say on Monday I have a trade that does really well. It's a 10% move, like I said, and then I make £100 or £200 depending on what my account size is. That's me now done for the week. Because let's face it, I've already made 100% return this week. That's crazy. Just take that money, sit it on the side, and be happy with it. Don't go into another trade just because it's the right thing to do. Don't get me wrong, if I see a trade that does match my style perfectly, I'm going to have to enter it. And when I did this in the past couple of months and weeks, it went well. But then I got into the concept of doing this with almost every stock, not really looking at the risk to reward ratio, and that's where things just really went wrong. So what I'm saying is, this week I'm limiting the amount of trades that I can do. I want to keep myself at 6 trades per month. That's my maximum amount that I wish to trade. It's not necessarily because, certain things are going to go better than others and I can spot the best opportunities. All it is if you limit yourself to a set number, this was a failure. This was a success. And you also know that you have these many chances to pull it back. Whereas if I'm down 10% today, I can just go, oh, let's jump into this trade, let's jump into that trade. No, now I've got to map out every trade properly, and I have to get into that trade knowing what's going to happen. Obviously, it's not certain, but we can talk about probabilities. People always say, is a stock market gambling? And what I personally think is educated gambling. The more educated we are, the higher the probability that the bet is going to go in our favour, versus, say, horse racing or something, where it's a case of, let's put £100 on this horse, it might win, it might not, nobody knows. When it comes to the stock market, we can see trends. We know businesses that are going to do well, we know earnings that are coming out next week, tomorrow, we know news that's just come out for the stock, how that might impact it positively or negatively for the weeks to come. And that's what I'm saying here. I'm going to do the proper research and maximize my profit whilst minimizing my risk. I'm going to take as few trades as possible, again 6 at the absolute maximum per month or per week, depending on how I feel and how things look, probably per month though, and that's fine. Another thing that I'm going to do is limit my profits and losses. That also sounds like a weird thing to do, but it's better in the long run. What I thought about is, imagine if I embarked on this trading journey properly from the beginning of my trading career, if you will, my investing career. Like I said, I first bought a stock when I was 17 years old. Right now I'm 20 years old. I just looked up, if I was to put in £100 and make a return of, say, 5% a week, or, 10% a month even, which is a lot less, I'd have quite a lot of money right now for doing barely anything. But that's the thing. It's a small return over a long period and the whole compound interest effect. When we look to make a huge amount of money very quickly, we often risk too much of our capital, which gives us that massive potential for loss, which we often don't even like to acknowledge because it's hard. But this week, I'm looking to make a maximum of 100% profits on the whole month. And 100% profits already are crazy, but just remember this is a leveraged account. So realistically, a 10% move over the whole month could equate to a 100% account change. But it's all about the risk management as well. So I'm going to make sure that I set specific and targeted stop losses. One thing that always kind of prevents me from closing out at my stop loss position is, well, this candlestick was weak, the stock might not pull back anymore, the stock might get stronger and stronger, and we might start to see this trend reverse, meaning that I'd be back in a profit. And then the trend does reverse for a small amount, before going massively back up, which loses me even more money. So overall, trading in the stock market has been a really interesting experiment, and despite the results I've seen so far, knocking me all the way back to neutral, I've not lost anything from this experiment. It's been fun. It's not really cost me much time because, let's face it, you map out your trade, maybe an hour per trade if you do it properly, and then from there, it just runs for itself. So like I said, it's one of the least impactful in terms of time business ideas or money making ideas that I can think of. Would I recommend it to anybody? That really does depend. The main thing that I would say is, what capital have you got to lose? Not to risk, but to just straight up lose. If you've not got enough money to lose or any money to lose, don't do it. We've spoken about many different business ideas on this channel before. The eBay business, the Shopify business, the Etsy business. These are just much better avenues than trading when it comes to risk management, because we don't risk much of our capital, especially if we're drop shipping, and we maximize our potential for results. But if you do have more money, if you are maximizing your income, as in you're trying to work as many hours as possible, and you're looking for that next stream where you have to spend less time to make more money, it could be worth it. All I would say based on my experience and my results is, stick to a strategy, get comfortable with it, learn it. Don't think you're going to profit in your first month if you don't know what you're doing, and obviously have fun with it. Don't take it too seriously. I am not going to say that the stock market cannot make you rich, of course it can, but don't think, like I did in the first couple of weeks, that putting in £100, £200 is going to make you £5,000 a month by the end of the year. You can scale that account slowly, but by doing so quickly, you're going to expose yourself to more risk, and as you may be able to learn from my mistake, The first couple of weeks may go completely amazing, and you may see some great results like, wow, this is something which I can do. But because you were risking so much to begin with, when the risk hits, when the negative hits, you're knocked out far worse than you would have been if you were just playing the game on a more simple level. So risk management is a key takeaway from this video. It has been a fun experience. You can do a lot of this stuff from many trading apps on your phone, that's what I do, and yeah, I am going to go back into it this week. So depending on how you guys find this video and how I actually do, I'll keep you updated on this experiment. I probably will continue with it as time goes on, as I have tried to mentally lock myself into that 18-week experiment. But as you guys know, when you're at a point where I am, between the point of neutrality and, potential loss, it's going to be a tough one this week. So I'm hoping that I make a profit this week. What I am definitely going to do though is minimize my losses if I do have to take any. Thank you for watching, and I hope to see you in our next one. See you all again soon, and don't forget to subscribe and share this video with somebody who might like it.